The world is witnessing a silent revolution, a shift so profound that it's altering the very foundation of the global financial order. At the center of this transformation lies a single, powerful question. What happens if the US dollar, the currency that has ruled the world since World War II, begins to lose its throne? Hedge funds, sovereign wealth managers, and billionaire investors aren't waiting to find out. They've already started moving billions, quietly, methodically, and globally, out of US dollar-based assets. But why? What do they know that the average investor doesn't? The answer lies in a rising wave of global de-dollarization. It's not a theory anymore. It's a trend backed by policy decisions from governments, trade agreements among emerging powers, and massive purchases of gold and commodities. The dollar, once the unchallenged king of currencies, is being deliberately dethroned, and the first cracks in its empire are now visible to anyone paying close attention. The BRICS nations, Brazil, Russia, India, China, and South Africa, are leading the charge. In 2023, they invited more countries to join their coalition, expanding their collective economic influence. But this isn't just about geopolitics. It's about building a financial ecosystem that can operate outside Washington's control. Hedge funds have taken notice. They're reallocating capital to commodity-backed assets, sovereign debt from neutral markets, and emerging market equities positioned to benefit from the weakening dollar. Russia, after being heavily sanctioned by the West following the Ukraine conflict, began pricing oil in rubles, yuan, and gold. China, with its digital yuan pilot already in motion, is finalizing trade deals with Gulf states and African nations that bypass the dollar entirely. Together, these two nations are dismantling the petrodollar system, brick by brick. And with every bypassed barrel of oil, the demand for US dollars quietly shrinks. This may sound like distant political maneuvering, but the impact is direct. Every hedge fund on Wall Street tracks the movement of central banks. And when central banks like those in China, India, and Turkey begin aggressively stockpiling gold, hedge funds mirror the move, not just to follow trends, but to stay ahead of inflation, devaluation, and political risk. The play isn't just in gold, it's in rare earths, agricultural land, lithium, uranium, and even water rights. These are the new storehouses of value in a world where fiat trust is waning. At the same time, institutional money is slowly but surely exiting US treasuries. Countries like Japan and China have trimmed their holdings. That capital is moving into neutral havens. Singapore bonds, Swiss equities, Gulf sovereign wealth projects, and even African infrastructure partnerships. The hedge fund view is clear. If the dollar is no longer universally accepted, dollar-backed assets become a geopolitical risk. Meanwhile, BRICS has announced its intent to create a shared currency backed by gold and rare resources. While still in early stages, the very idea of a commodity-backed financial instrument being used for global trade is enough to make hedge funds reassess their portfolio exposure to fiat-heavy markets. A multipolar world means multipolar finance. That in turn means no single asset or currency can be trusted blindly. And then there's crypto. Bitcoin, once dismissed as a speculative toy, is now being treated by hedge funds as digital gold. In fact, major funds are including Bitcoin in their long-term macro theses, not as a risk asset, but as a geopolitical hedge. Because in a world where governments weaponize currencies, decentralized alternatives become appealing, especially if those alternatives are limited in supply and borderless by design. But this isn't just about offense, it's about defense. Hedge funds aren't simply looking for upside. They're looking for insulation, ways to survive dollar volatility, inflationary risk, and black swan financial events. They're using options and futures in commodities. They're shorting dollar-sensitive bonds. They're entering swap agreements in neutral currencies, and they're building private equity positions in non-dollar denominated regions. The de-dollarization movement isn't loud. It's quiet, calculated, and reserved for those who understand how the global chessboard is shifting. It's happening through small signals: declining dollar settlements in trade, reduced central bank holdings of USD, and rising interest in regional trade blocs that rely on mutual currencies. It's in the formation of non-dollar SWIFT alternatives. It's in oil being priced in yuan and settled in gold. Even US-based hedge funds are hedging against their home currency. not because they believe the dollar will disappear, but because they believe its power will dilute. And in macro investing, even a 10% shift in dollar dominance can cause seismic changes in capital flow, debt pricing, and commodity markets. As interest rates rise in the U.S., emerging nations are no longer incentivized to hold U.S. debt. That creates a feedback loop. Less demand for treasuries leads to higher yields, which puts pressure on the U.S. government's ability to refinance its debt, which increases the temptation to print more money, which further erodes trust in the currency. Hedge funds see that cycle forming, and they're acting before the average investor catches on. If the dollar loses even part of its global settlement share, its impact on markets will be immediate. Gold will surge, crypto will rise, commodity nations will outperform, and inflation in dollar-importing countries may spike. Hedge funds aren't predicting doom. They're preparing for divergence, a world where more than one financial empire can exist. That's the core truth here. Hedge funds don't fear the end of the dollar. They prepare for the end of dollar dominance. That's a subtle but critical difference. And it's why they're quietly betting against America, not in a way that signals collapse, but in a way that recognizes the rise of others. Because in the new era of global finance, the most valuable currency isn't the dollar, it's trust. And hedge funds are betting that trust is now diversifying, geographically, economically, and financially.